I know that you're not in favor of this plan, but I really want to focus in on the basic question, the economic question. Do corporate tax cuts lead to increased growth? You heard Glenn Hubbard. Yesterday we heard Jamie Dimon, who leads J.P. Morgan, in his earnings call said if we had tax cuts, he'd hire more people. As an economist, is that true that it'll lead to growth?
Directionally, when you cut corporate taxes, corporations invest more, and there's some positive impact on growth. The problem is it's not nearly large enough to make the tax cut pay for itself. It is got perverse distributional consequences because most of the benefits go to corporate shareholders who have high incomes. And if you do it in an irresponsible way, you create a specter of debt that does more damage to growth than the corporate cut spurs growth. There's also the fact that this is probably about as bad a moment for counting on those effects as we can imagine. We already have the cost of capital at an extraordinarily low level by historic standards because of low interest rates, because of super high price earnings ratios, because corporations are already permitted to write off half of or more of their investments on the day when they make them. So I don't think cost of capital is the constraint on corporate investment, nor for that matter is cash flow, given that profitability and profit margins are at near record highs. So this isn't the moment when the focus should be on corporate tax cutting. Should we do something about the problem of cash abroad? Yes, but part of doing something about that problem is making it neutral, whether you leave the cash abroad or whether you bring it home. And an important part of doing that is taxing it more when it's abroad. It's an extraordinary thing. This president is as nationalist from an economic point of view as any we've had, but the center of his corporate tax plan is an idea called territorial. And what that means is that whereas today you get taxed, at least in principle and in some way, on your corporate profits, if you're a U.S. company, wherever you earn them in the world, he's going to change things so you only get taxed if you operate in the United States. That seems a very odd way for the anti-outsourcing president to be structuring his tax reform. So, yeah, there's a case for corporate tax reform. Yeah, of course, cutting corporate taxes can, if it's done right and carefully, be an encouragement to investment. But doing it in a way where that's the whole tax package, where you bloat the budget deficit, where you don't do anything or enough about corporate shelters, where you don't provide any numbers or details on your plan, that's irresponsible.
So let's take some of those objections, one at a time, as it were. One of the things you referred to at the beginning and at the end is the deficit. And you, as you heard, Glenn Hubbard said, you have to be able to pay for it. You have to broaden that base. If you could have corporate tax cuts that were compensated for by reducing deductions, such as the business interest deduction, that you really could pay for by broadening the base and eliminating a lot of business deductions, would that move it towards something that you think would be positive?
A revenue-neutral corporate reform that encouraged the bringing back of capital from abroad would be a very valuable step. That's something I've been calling for years. It's just it doesn't bear any resemblance to the notions that have been put forward by the administration.
And you also mentioned distributional effects, which obviously are a very hot issue on Capitol Hill across the entire country. Is that distributional concern an economic concern, or is it more of a matter of policy or even morality?
I think it's both. There's no apology for saying that at a moment when we're in a new Gilded Age, with the income distribution back to where it was in the 1920s in terms of how much is going to the top 1%, that when you're thinking about changing the tax code, it's very important to do it in a fair way. I make no apology for saying that. But it's also a matter of economic efficiency. One crucial part, David, of their proposal is the new treatment of so-called pass-throughs, people who are in business but are not in corporations. I can't imagine why, from an economic efficiency point of view, we would want to be engaged in a big tax cut on the partners in a major urban law firm, or for that matter, why we'd want to give me a big tax cut if I do consulting for a company. And so I think that is perverse from an economic efficiency point of view. I also think that if we want to maximize the spending that propels the economy forward, we're better off finding ways of cutting taxes on people who aren't like you and me and who are in a situation where if they earn an extra dollar, they're likely to be able to spend most of it. So the question of distribution, the question of fairness is both a moral issue and it's also a direct economic efficiency issue. I think it's also an indirect, broad issue for the morale of the country. There's a lot of unhappiness and anger out there. That's an important part of why the president is elected. And if we don't do something to assuage that anger, that's going to have broad consequences for our politics for a long time to come. And it's really hard to see why focusing a corporate tax cut on those at the very high end is going to do much to assuage that anger. So look, tax reform is the right word. That's been a word that people in both political parties have been using for many years. I've been talking about, not that I matter so much, but I've been talking about tax reform as the right thing. But it has to be done in a sensible way. And this isn't, I want to say one other thing, David, this isn't a partisan thing. You had my friend Glenn Hubbard on. Glenn and I don't completely agree. Glenn is much more oriented to supply side incentives than I am. He's probably less concerned with fairness or sees the fairness issue differently than I do. But he's a person who makes serious, respectable, legitimate, straightforward arguments, and those are the basis for compromise, and things can be worked out. But when you have, and I hate to be in a position of using this word about our government, when you have senior economic officials making claims that are made up, when you have them, when you have our Treasury Department taking down research studies done by civil servants from the Treasury website because their conclusions are embarrassing to the administration, it's very hard to have dialogue and compromise and get to a good place.
Larry, you've mentioned fairness more than once. I want to understand exactly how you would define fairness. If you had a tax reform plan that maintained the proportions, the distribution we have now, and I've seen various numbers like 10% of the people pay 80% of the taxes, if it just maintained that, would that be fair, or are you saying that we should actually shift the burden more? Because as a practical matter, if it's 80% paid by 10%, then that 10% is going to get a bigger break if you keep the distribution constant.
David, if I had my choice, I'd respond to the trends in the country towards more inequality by making the tax code more progressive. What I would do. But if someone said that they wanted to keep the distribution of tax burdens constant across income classes, that wouldn't be my first choice, but I'd find a plan of that kind an entirely reasonable basis for discussion and debate and for moving forward. The problem is that that's not the plan that appears to be on offer. Look, one key part of their plan is repeal of the estate tax. Mm-hmm. As you well know, because you live there are a lot of affluent people in New York. Only 470 people in New York, not the city, the state, paid the estate tax last year. So that's 100% people at the very, very high end. And that's one signature item in this proposal. I referred to the question of the question of the pass-throughs. So look, I'm not somebody who thinks that every economic issue should be turned into Robin Hood. There are people in my political party who do.
Yeah.
But that's not my perspective. But I do believe that when you put something forth called a tax plan, it has to be described in a way where people can figure out what their taxes would be under it. That's what makes it a plan. That you need to put forth an analysis of the revenue consequences done by somebody other than a heated advocate of the plan.
Right.
And that you need to present some data on who's going to be helped and who's going to be hurt.
Sure.
Those are sort of the norms of American political life.
That's right.
And we're operating outside those. And so I think we're missing an opportunity.
Well,
look, we have
let's just clarify, Larry. David, did you pay your estate tax last year?
I'm not dead yet, so fortunately I didn't have to.
Okay, so,
Exactly.
so he did pay. Let's just be clear about that. Hey, Larry, I want to turn to central bank.
I'm sorry. Who paid? The president's, the president's
David,
alive.
David.
I'm still here.
Neither David nor the president, fortunately, has paid estate tax yet.
Right.
I hope it'll be a long. I hope David will be a very, very long time. I'm hoping it's 75 more years before you pay estate tax.
Okay, so Larry, I want to turn to central bank policy because you just had a report out with Olivier Blanchard yesterday talking about what the next crisis will look like and what central banks and governments can do. The news today, Larry, is that potentially the ECB is looking to extend its bond buying program but reduce the amount that they buy. And if you take a look at the Bloomberg here, it just shows the amount of weight that could put into the market. This is ECB assets as a percentage of BOJ, ECB, BOE, and Fed. It's 34%. It's substantial. They're punching above their weight. They're going to pare that back. Larry, what does that do to the market?
Look, I think Mario Draghi has been the most important and successful central banker of the last 35 years. Without his efforts, I don't think the euro area would have stayed together. And I am very confident that any changes that he and the ECB make will be very carefully measured. The good news is that we have seen significant evidence of turning in the European economy, and therefore it is going to be more self-sustaining and in less need of monetary support than it was for the previous several years. And this kind of adjustment, some kind of adjustment, is appropriate to that. I think that in general, market participants should not be alarmed about reductions in QE as long as they're very well signaled, done with an element of gradualism. There's the possibility of reversal if necessary. I think it's going to be okay.
Okay, Larry, finally, I have to ask you who's going to be the next Fed chair. You get one word.
I hope it's Janet Yellen.